Welcome to Accounting A YouTube channel. In this video we are going to see holding company accounts. So before we see the problem, what is holding company and what are the steps prepare consolidate balance sheet with necessary information. Please watch the full video for better understanding. I will explain in all point in holding accounting process step by step. Okay, holding company is company that attaches majority shares of other companies. For example, if you take two companies, company A and company B, company A has 20,000 shares, company B has 12,000 shares. If company A acquired majority shares of company B, for example, if company A acquired 8,000 shares of company B, okay, the majority share acquired by company A, the rest of the shares acquired by the general public is 4,000 shares. The basic concept about holding companies. Now, let me see the step to prepare consolidated balance sheet. Now, let you see some important step to prepare consolidated balance sheet. Okay, then end of the year at the acquiring majority share of subsidiary company. Of the finally, company need to prepare consolidated balance sheet. Consolidate mean both holding company and subsidiary companies transaction will be merged together. The first step is computation of holding and minority ratios. See total share of subsidiary company in the total share, how many number of shares acquired by holding company. Okay, the remaining share will be acquired by general public. So you need to find out the ratio between holding and minority. So let me explain this along with example. Let me explain how to find out holding and minority ratio with this example. Look at this balance sheet. Here there are two companies, holding and subsidiary. In liability side, left side, asset side also holding and minority, holding and subsidiary companies in right side. Okay, so look at the share capital. First subsidiary company amount $120,000. So each share value $10. Then how many number of shares? 120,000 share value divided by 10, you can get answer 12,000. So 12,000 out of 12,000 number of shares, how many shares acquired by holding company? For that, look at asset side. Here is investment. So there are holding company invested $100,000 on 8,000 share in subsidiary company. So this is the number of share acquired by holding company. So out of 12,000 shares, holding company acquired 8,000 shares. To remaining 4,000 shares and 4,000 shares acquired by general public. So that ratio between holding and the rest of the share is called holding and minority ratio. Let me show calculation how to calculate holding and minority ratio. Look at the balance sheet. Share capital, subsidiary company 120,000, amount is share value 10. How many numbers of shares? $120,000 value divided by 10, get answer 12,000 share. So 8,000 share acquired by holding company, so remaining 4,000 is acquired by general public, and general public identify as the minority shares. This is the holding and minority proposition. 8,000 is to 4,000 is convert, 8 to 4 is also convert, 2 into 1. Holding and minority ratio as 2:1. See, the holding and minority ratio is very essential. into distribute capital and revenue profit and capital and revenue dividends and bonus shares. All these things will be shared among holding and minority shareholders. So this ratio very essential distribute among holding and minority. This is a way to find out holding and minority ratio. This is the first step. Computation of holding and minority ratio. After find of this, the second step ascertain capital profit. So and next step is computation of revenue profit. So we prepared consolidated balance sheet. This particular calculate very important. See, you need to find out the total capital profit and total revenue profit. See, capital profit mean before the date of acquisition. Revenue profit date of after the date of acquisition. I will explain these points among examples. See, look at this example. Usually balance sheet will prepared only at end of the financial year. This opening date and closing date mean balance sheet date and date of acquisition. So when the holding company acquired majority shares of subsidiary company, that date is very important. Based on this information only, we are unable to identify or unable to ascertain capital profit and revenue profit. Capital profit mean before the date of acquisition. Revenue profit is after the date of acquisition. Any profit or any resource, anything earned at date of purchase or date of acquisition called revenue profit. So date of acquisition very important to classify or identify whether profit or capital profit or revenue profit. How to calculate capital profit and what the different cases and scenario. Okay. So find out capital profit and revenue profit. I will tell you now. See, capital profit or pre-acquisition profit, I told you now before date of acquisition is that any profit or any undistributed profit or any accumulated profit or any resource in consider as capital nature. So it can be any one of the forms. This is form of capital reserve, general reserve, reserve fund, share premium, profit and loss. Profit earned during the year till the date of acquisition. This is very important. All these things taken from the liability side and this amount and had to find out profit earned during the year. This is very important. Okay, this is format of computation of capital profit. I told you now capital can be form of general reserve, capital reserve, profit and loss and other reserves of subsidiary company on the date of purchase of shares. If you find any these item under liability side, the to subsidiary company, all such thing will be concerned as capital nature. Of will start with that. Then is any bonus share issued by the subsidiary company from capital profit. This time is information will be given any adjustment. If you find any information related to bonus share issued by subsidiary company from capital profit. Second information, that is any dividend paid out of capital profit. So generally capital paid to dividend in capital profit or revenue profit. Whatever may be they guessed, they can decide what for use paid dividend. If you find such information if the dividends declare out of capital profit, then that has to subtract from capital profit. So do these two things, subtract from total capital profit. And next one, if that is any profit during the current year before date of purchase of share, that is any profit earned by the subsidiary company, that will be calculated and add along with capital profit. At the same time, at the time purchase of majority share, that is the possibility of profit and revaluation and asset and liabilities, and lost on revaluation and asset and liabilities. If that is any profit, simply add. If that is any loss, simply subtract. And finally, if that is any capital expenditure given in the old balance sheet, example, uh, preliminary expenses in recorded in the asset side. If you find such capital loss or expenditure, that has to be subtracted from capital profit. This on maximum adjustment can be done any calculating capital profit. Okay, but you no need to get in all these items from one particular problem. For your better understanding, have taken all the possibilities. Look at these steps. We discuss these two things. First, the computation holding and minority ratio. Second, ascertaining capital profit. We have to discuss more steps, and we need to understand all the steps with clearly idea. So this video length goes too much, therefore next step and more tips we will discuss with example in next video. If you have tell anything about today's lesson, any question or anything, comment to here and like and share the video. Don't forget subscribe and click the bell icon for get notification when we upload new tutorials. Consolidation part 2 in next video coming soon quickly. And comment your suggestion, comment your idea, comment your question into this video about today's lesson.